Welcome to the Retirement Lifestyle Show. I'm your co-host, Roshan Loungani, back with another great episode. As always, we've got Adrian Nicholson with us. Adrian, how are you doing today?
I'm fine, Roshan. I'll be doing better once I know your topic. For our listeners and viewers, sometimes Roshan and I record an episode and we don't know what the other person's going to talk about. So I'm anxious and I'm ready to hear it.
Yep, and we like the to get real reactions and real thoughts. So, Adrian, what I've been seeing a lot in the markets recently are turnaround investment opportunities. So, there's uh, Warren Buffett said in his 1979 letter, and this is his quote: "Both our operating and investment experience cause us to conclude that turnarounds seldom turn." So that is my struggle right now. Is I think I see some compelling investment opportunities out there, and historically I've tended to avoid turnarounds because the another term is they'll say turnarounds can be value traps, so they look like a good deal, but they're really a dying company. So that's the risk, and that's what I'd like to go over today. So I have, through various different sources, research, intentionally looking for this, or just regular reading and investment research and analysis, found some thoughts and some frameworks on turnarounds. So I want to go over just some things to think about when you're looking for these, for our investors, for all the investors out there listening. And I apologize if this is getting too much in the weeds. I tend to do that sometimes in the investing topics, but let's jump right in. So you're looking for a turnaround. What is a turnaround first? It's a company that's trying to improve after a period of troubled performance. They've got to right the ship to a certain degree. And so how do you know what to get in and what to avoid and what to look for? So there are a few things we'll go over. Adrian, before I jump in, any initial thoughts on the topic?
So my initial thought is I'm feeling good. I didn't fall out my seat. I like your topic. I think it's going to
All right.
be a great one. So the first thing that comes to mind is one of the first things I learned about when I first started in the industry. And a colleague said this to me where I was looking at a company, looking to see whether it was a good investment or not. And then one thing that I noticed, I was using a technical indicator called the support level where stocks move up and down. And if a stock drops but starts to stay in a certain level and still stay in that area day by day, they call it a support level where it seems unlikely that it'll drop even lower. So it was a company I like, but I saw that it was dropping in price and it started consolidating this level. And I thought, hey, maybe this could be an interesting investment. And the colleague said, you have to watch out for falling knives. And I think that's maybe one thing that we talked about before in this podcast, but Roshan, for our viewers and listeners who've never heard that before, you can go ahead and define that for them. And I think that's something that you have to consider when you're looking at turnaround plays.
Yeah, and so first, to catch a falling knife is buying something that's going down, and oftentimes a value trap that I mentioned earlier that the turnaround might be a falling knife. So you don't want to try to catch a falling knife because you might cut yourself. Right.
I
That's
wonder what the opposite would be if it works out.
if it were well, and I call this a little bit different because everything we're looking for here is actually not technicals. So we're not saying a turnaround as in the price is dropping, so now the price will go back up. It's more the business is declining, and can they fix whatever's wrong with the business to then turn the company around. I'm glad you brought up the technical side of this because when I had said, just as the definition, it's a stock that's trying to improve performance after a period of poor performance. I wasn't speaking of a period of poor performance on their stock price. I was more speaking of a poor performance of the business. Now, the stock will definitely follow. So some people might think the distinction is minor, where I think the distinction is pretty significant in that you're not doing this just based on stock price movement. You're doing this based on the business and what the business has done and where you expect it to go.
Can I give an example that I think you'll probably jump right into?
Yes.
I think one of the common ones you look at, especially when it comes to business or something that might get people's attention to say, hey, this might be a turnaround investment here. This might be a good opportunity, is the idea of new management coming in. That could be very exciting, where the old management is maybe the reason why this company is down in the dumps right now and having a lot of issues with becoming profitability. But there's just this news coming in that this new management team or this new CEO is coming in, and historically they have a good track record. So this could be a good opportunity.
Yeah, and I'm going to jump into that section as to one of the things to look at on here, because you've just given me a great segue. But there are multiple things to look at and research in here. Management is definitely one of them. So one thing, as you had said, you had mentioned new management. So uh, what you've got to look at is management part of the problem. So even prior to new management coming in, if management is part of the problem and you don't know if new management's coming in or not, that would be a reason to walk away until new management comes in, right? Another one that's a good one is, have they tried so let me actually use this as in the category of failures and value traps, so things that could go wrong. Ineffective management, Adrian, as you said, new management. I'm going to say this is before new management's come in, or if new management has come in and they have not done a good job. So a couple things to look at is, did the management that's there contribute to the problem, or was it previous management that created the problem? Has management shown poor decision making or leadership skills? Does management or the board lack the expertise to succeed? And this the last one, um, is the board weak and uninvolved? So looking at management, and that was just reasons to eliminate, reasons to eliminate in the sense that, let's say you found these 10 companies that fall into turnaround, or even if you're just researching one company and saying you may want to invest in this potential turnaround opportunity. Well, if they have management that you think are the cause of the problem, or uh and even if you think they're the cause of the problem but you think they can fix things, is the board weak? Have they shown examples of being able to fix it, or have they shown examples of poor decision making and leadership skills? Another good one with management in mind here, and once again, this is all in the what to avoid, failures and value traps, is, have they tried multiple turnarounds already and failed? So if they have, that could show that they might not know what they're doing, and you may not want to trust that they'll be able to make a turnaround. The thing with turnaround investing is that, yes, there is an opportunity uh, for gains there, but there's also an opportunity for significant losses if that turnaround doesn't happen. If you are catching the falling knife, that company could go out of business, right? Like, I imagine that Blockbuster Video had ideas for how to turn around their company, right? And they are no more. I believe there's one that still exists in the country, but yeah, they're by and large gone. I'm sure Radio Shack had ideas for how to turn around their company. So if you're ever not sure, that might be a reason to walk away. It's actually a good time also for our disclosure. This is not investment advice at all. Not telling you to invest or to not invest in turnarounds. This is just for discussion here. Please consult your financial advisor. If you need an advisor or need help, you can reach out to us. But let's continue on, Adrian. That was definitely a great
Yeah,
one.
that was a great one. And the only thing that would really come to mind, and I'm not sure if we'll discuss on this later, but I think this would be a good point to talk about market share. I mean, that's very significant when it comes to businesses and investments. And what I mean by that is, if we just take this company, for example, that's performing very poorly, they will lose market share, or they could be losing market share to their competitors. For so let's just use that example you just gave, Blockbuster. When they were having a lot of issues, you got to imagine companies like Netflix were starting to take their share of the market, and that sometimes is very hard to get back, depending on how, I think the term we used to talk about at university was how attractive or unattractive their market environment is. If it's very unattractive, that means that not a lot of new businesses can get into that and take away share. So that's something too that you really have to consider, what type of industry or sector they're in, and how many competitors they have as well, because that can be something that's very important to their business model. Because if you talk about a company that's not performing well but still has a very big market share, there's a good chance that they might be able to turn it around. But if you're talking about a company that doesn't have a strong market share and now is down, that could be an extremely hard uphill battle to win.
Yeah, agreed completely. I definitely look at market share for any investment I'm interested in.
How
And
do you even
I
look at that for our listeners and viewers
actually,
that might not be familiar with it?
so you should look at multiple sources, but it really is as simple as in most cases, as simple as a Google search. So, and you can find out what the company's market share is. So I will look at that every time. Now, the reason I'm saying every time is because that's not specific to my turnaround list or analysis. I'm going to look at market share either way. What I think would be interesting, though, specific to market share with turnarounds is, have they lost market share? And if they have, can they regain it? Right. So I would look at that for market share. Uh, Going back to the list first, I'm going to start with the business. Is the company positioned to create shareholders value? And what that means is, can they generate cash flow and return it to shareholders, whether it's dividends, whether it's buybacks? Will they have extra money, or do they need every single penny to just stay operational? Is there a viable business with a sustainable competitive advantage that could enable them to thrive again? So in that Blockbuster example, I'm just comparing it to Netflix. I did not prepare that example for this episode, so my data might I'm definitely not going to have data or accurate data. But while Netflix was definitely losing share to, I'm sorry, Blockbuster was definitely losing share to both Netflix and Redbox, right at that time. So you'd have to say, it, did they have a competitive advantage that could make them thrive again? And I would think the answer is no. Granted, looking back is easier than at the time, but the reason my natural reaction is no is because the red box were just sitting outside of like grocery stores and 7-Elevens, and you could get a movie for $1, where I think Blockbuster was charging almost four, and you had to go specifically to the store, and Netflix was sending it to you in the mail. So you don't have to leave your one is, Redbox is conveniently located where you're going anyway. Netflix is mailing the, sort of the same video to your house. So you don't have to go anywhere at all. And they're charging significantly less. And Adrian, you're probably too young for Blockbuster, but there would be ridiculous late fees, right, for Blockbuster as well. So if I was trying to come up with a competitive advantage for Blockbuster, if you're looking at them at that time for turnaround, the only thing I could come up with potentially was that they could have a with so many different locations that might potentially give them an advantage. But then when you compare it to Redbox, that just had to put a kiosk up, or a vending machine up, uh, I don't see that as an advantage. So, what is the company's competitive advantage? They'll need that to survive. I've got two more under business, and then Adrian, I want to get your thoughts. Um, are the products or services still relevant to the market? Uh, at one point, payphones were very relevant to the market. People don't need them anymore, so a payphone business is probably not the way to go. And then finally, are their issues temporary setbacks, or has the business experienced a serious decline with uncertain outcomes? So just going back to the Blockbuster example, you could have been looking at it and say, well, are there the issues with Blockbuster temporary? Can they be fixed? Or has the world just shifted to where people would get their CDs, I'm sorry, their DVDs or video games at the grocery store vending machine or in the mail from Netflix. And then you fast forward to now where you just download them or stream them, right? Downloading more for the video games and streaming for the thing. So if you're looking at Blockbuster, and once again, we're looking at it in hindsight, but we couldn't come up with a core business with a sustainable competitive advantage. At this point, we know their products aren't relevant, but in real time, who would know about that? And finally, the setback did not look temporary. It looked like the internet just shifted things completely. So I'm not necessarily picking on them for any other reason than it was the first example, but looking at the business at its at its core, I would feel like there were fundamental issues with Blockbuster where they're where you wouldn't want to invest. That wouldn't look like a good turnaround. That would look like a falling knife.
I mean, that's a good one. What comes to mind for this one, especially with like the Blockbuster example that you gave, is it was hard for them, like you mentioned, to recapture that market share that they had, and that's something that is vital that you have to look at. But also, too, I guess what I mentioned before, track record and cycles, business cycles. Where in Blockbuster's case, it wasn't really a cycle because I got to assume they were doing very well, and then once they started doing poorly, they just never got back to like a profitable level, and they just closed up their stores. Where maybe if you are looking at a company and they have a very long track record where you can see, okay, maybe they're just getting impacted by a cycle, or depending on what kind of economic environment may be favorable or unfavorable to them. And if you're willing to wait until things start going in the direction, that might be your opportunity to get in. So I think cycles here is something that you have to look at as well, because I mean, you do see it happen to certain industries or certain sectors. I mean, one that we can talk about too, or just something addressed now, is the commercial real estate. I mean, that one too experienced a pretty hard 2020 schedule and hasn't got back to the same levels that it was historically. But again, that wasn't really a cycle. That was pretty much a one-off thing, but that's also something you have to look at.
Yeah, yeah, and with commercial real estate, it's just such an interesting one to talk about now, uh, because people weren't going back to the office, and now you're seeing throughout this year in 2024, most recently Amazon, where they're telling people you've got to come back into the office. So that may be an opportunity for commercial real estate. I've been very cautious with that. And I did look into companies in that space about a year ago. And I did not invest in any of them, but I believe they've all are all profitable right now. Profitable in the sense that had I bought at the time, they would be doing better. But you've got to assess the risk, right? Thinking about it in real time. I think it was last year I was looking at them. I wasn't sure if people were going to go back to the office, so I was trying to see, well, what else can they do with that space? That was an important factor to me. So the great example. Um, Next, with the balance sheet, which actually applies really well with commercial real estate, but when you're looking at the turnaround company and their balance sheet, do they have enough uh, in resources to get through to the turnaround? Meaning, uh, is the balance sheet strong enough? Do they have enough in cash? Do they have too much debt? Or are they needing to take on debt? How are they going to get through to make it until the point of them turning around? So that's the next thing after you analyze the business. And if it meets your criteria, it's, will they be able to make it through to get to the other side so they actually turn around, or will they run out of money before they get there?
Yeah, I mean, I think that's just capital, like you said, and that's another time frame one. Are you willing to hold on to it just to see if that time frame will work out? And looking at their balance sheet is also something really important and fundamental too, because it also will show you the assets they have on hand and liabilities. That can also speed up the process as well, especially if they're highly leveraged, and depending on what the interest rate environment is something too that can decide you not going with that investment.
When you talk about commercial real estate, Adrian, that's a huge part of the problem, right? Is they've got uh, debt uh, to finance their buildings, right? Interest rates went up, and so now their debt service cost has gone up. People weren't going back to the office, so now their revenue is down. that's why when I was looking into this before, I was looking at it and thinking, well, what can they do if people don't come back to the office because they have to pay this debt, and if their revenues are down, or what's happening now, will people all go back to the office with your commercial real estate example?
Yeah, and I gotta imagine too, you could probably also just compare it as well. Let's just keep picking on real estate, commercial real estate. But if you see one company was able to finally turn around and become profitable and get back to those levels that they were at before 2020, and you can see, well, the company I'm looking at is starting to take notes from them or headed in that direction as well. Or maybe the company is doing the exact opposite, could give you an idea on how that investment could play out for you.
Yeah, it definitely will give you an idea. You can find an example, and if you find the company you own or are interested in didn't make that fix, and then another company did, that gives you the opportunity to figure out, well, what did that company do to fix it, and why isn't my company doing that? And there could be a very good reason, or it could go back to what you mentioned earlier, Adrian, which is management, right? Maybe management of the company that did the turnaround is just better, or maybe they just got to the plan sooner, and the other company can copy what they did, right, to improve. So yeah, if you have an example, if you have a success story, I think that can help you with making your decision with whether to invest or not into a turnaround.
And definitely just see if it's possible.
Yes. Yeah, if you have a success story, it's possible, right? So then you can see, well, what can this other company implement? Can they copy it? um, Next, figure out what went wrong. Why is this company, why do they have these problems? How bad of a problem is it? um, and that's where it could be management, it could be the board. You've got to look at that. You've got to look at what's gone on with the market. Were they not able to keep up with market trends? Are they allocating capital poorly? Do they have too much debt? Is it Have things changed economically, socially, uh, regulatory environment? Have things like that changed? So you've got to figure out what went wrong, because if you don't know what the problem is, you won't know how to solve it, and you don't have to figure this out all on your own. If management is good, uh, they may lay out the plan with you, or even if management's bad, they might have a plan, but they'll usually have a reason to explain their underperformance, and then you can say you agree or disagree with them, right? Then that'll help you in making your decision.
No, I think that's a great one as well and vital to the investment decision. Do you want to expand on that more, or is there another one in this section?
No, I'm going to go on to the next category then, which is management and their decision making. What are they doing? What are they actually doing? What are their actions versus what they say they're going to do? And some of this is a repeat from earlier, when you had mentioned management, and I jumped right into that section. But have they tried multiple turnarounds already that haven't worked? Do they actually understand the extent of the problem and share that with you, at their in the annual report, on their quarterly calls, or do they really not have a good handle of it, or could they be hiding it from you? um, have they actually made any progress? So they have a turnaround, they have something they want to do to fix it. Have they actually made progress in doing that, or are they just talking about it, as I said earlier, with their actions? And a lot of this, you're going to look at things on their balance sheet to see, what's going on with inventories, what's going on with receivables, ratios, liquidity, cash flow. You're looking for signs of progress by what management's doing, or a lack of progress, and seeing what they're saying. Like, are they concerned and saying, we have a plan, we're going to fix this, and we're going to do this now, or are they saying, no, everything's fine and it'll be okay, right? Next, free cash flow. How will they generate free cash flow, and how much investment is required to fix the business, and how much cash is available? Like I said earlier, will they be able to get there? I've just got a couple more that I'll mention that I had been using, and I started this research, as I said, because I'm coincidentally finding a lot of turnarounds I've been hesitant to invest in them, but some of them look really compelling as good opportunities. So I want to make sure I research what's out there. But so things that were on my list uh, before already was looking at their gross profit margin, right? If they have good gross profit margin and then they have low earnings, there is room for things to be fixed in there typically, because that means that if you have good gross profit margins but you don't have good net margins, there may be some waste in there. If your gross profit margins are low, there probably isn't too much a management change or a fixing of the business can actually do. And I talked about management a lot already, but their management team, you're betting that these people can fix the problem, and them being able to do so will either make a profitable investment for you or a loss. So really looking into to management, we spend a lot of time talking about them both at the beginning and at the end. Are there any activist investors involved? They can sometimes help create change. Um, are you seeing any progress? I'd mentioned this recently with the numbers, but even with the plan or the activist. So you had mentioned management, Adrian. So if an activist is in there and saying we think we need to replace management, is management actually being replaced? Is something actually happening? The last sort of warning I'll give, and once again, this is not investment advice. This is just food for thought. Please consult your advisor, but be careful with how much you invest in something, right? I have it as manage your position size carefully, because as Buffett said earlier, I'm going to read it back to you again. Both our operating and investment experience cause us to conclude that turnarounds seldom turn. So if you're in a situation where they seldom turn and you think this is the case where it's going to happen, protect yourself by not getting too heavily invested in whether that turnaround can happen.
I mean, that's a great one. Just having a strategy in place for that investment decision can just help you manage any losses.
Yeah, and that's what you want to do, right? You want to be able to manage those losses and protect yourself as best you can, and that's why there were so many questions in here where you just abort. You say, all right, I feels too risky, I don't understand it, too complicated, and move on to the next one. There are a lot of investments out there for you to look into.
Mm-hmm. Opportunity cost.
Definitely with your time, right? Your time is limited. You've got to make sure you're using it wisely, and it's you will sometimes miss opportunities by quickly scratching something that actually does turn around, but that missed opportunity may have led you to something better that was out there on a risk versus return basis. So yeah, be careful if you're hunting for turnarounds out there. If you've got any other thoughts or ideas for us to add to this list, please let us know. Like, subscribe, give us 5 stars, take control, and achieve your goals.
Schedule a conversation with Roshan, Adrian, or Eric today at retirementlifestyleshow.com. Roshan and Eric are certified financial planner practitioners. They, along with Adrian, are investment advisor representatives and serve clients across the U.S. with financial planning and investment advice through Arete Wealth. If you found this show helpful, gained knowledge, or enjoyed the time you spent with us, tell your friends and leave us a 5-star review. This will help others discover the show. To access our show notes, to download any of the tools mentioned in today's podcast, to ask us a question, or to schedule a conversation, go to retirementlifestyleshow.com. All opinions expressed by podcast hosts and guests are solely their own. While based on information they believe is reliable, neither Arete Wealth nor its affiliates warrants its completeness or accuracy, nor do their opinions reflect the opinion of Arete Wealth. This podcast is for general informational purposes only and should not be regarded as specific advice or recommendations for any individual. Before making any decisions, consult a professional. The show hosts offer investment advice through Arete Wealth Advisors, LLC, an SEC-registered investment advisor, and securities through Arete Wealth Management, LLC, member FINRA, SIPC, and NFA. Finally, our music is The Chance by Jason Shaw in Audionautics. is part of the YouTube audio library, and it's licensed under a Creative Commons license. I am Ray Voices. Thank you for listening.